All right, let's dive into the PLAZM health report for day 128. Today is one of those classic days where you see two totally different stories playing out. The price on the screen took a little step back, but underneath the surface, the fundamentals, well, they absolutely surged forward. We're going to break down exactly what that means.
Okay, before we get into the numbers, you know the drill. This is all for educational purposes. It's definitely not financial advice. You've got to do your own research, always.
So what's the tail of the tape for day 128? Well, it's a split decision. In one corner, you've got the price. It pulled back a little over 3%. But in the other corner, that's where things get really interesting. The fundamentals, the actual health of the protocol, went straight up. This is the exact kind of divergence we need to dig into.
All right, let's get right into the proof. We're talking about two massive milestones that were just hit today, and these really show you where the protocol's engine is headed.
Check this out. First up, the burn. We just blew past 1.2 million PLAZM tokens. Gone. Permanently torched from existence. And get this, 30,000 of those were burned just today. We're not talking about a line on a chart. This is supply being literally removed from the equation for good.
But it's not just the number, it's the speed. I mean, think about it. It feels like just yesterday we hit 1 million burned, right? That was only 7 days ago. In just 1 week, we've torched almost another 200,000 tokens. That's not just momentum, that's acceleration. And that deflationary pressure, it's really starting to build.
Okay, milestone number 2, and this one is a biggie. Claimed profits. We have officially crossed the $70,000 mark. And let's be super clear here. This is real-world yield. This isn't just printing more tokens. This is actual revenue being paid out to participants. Over 70 grand.
And you can see this isn't some one-off event. It's been a steady climb. Again, this is the protocol earning its keep from trading fees. We've gone from around $53,000 to over $70,000 in just a little more than a month. That's, what, a 32% jump? That's the engine, right there, just humming along.
So you've got burns picking up speed and real yield crossing huge milestones. The big question is, how are people reacting? Well, these next numbers tell you everything you need to know about conviction. People are clearly watching the fundamentals, not the price ticker.
This right here, this is the whole story in one picture. The price dips 3%, and what happens? Another 10,000 PLAZM gets locked into staking. You see what that is? That's the opposite of panic. That's people seeing a discount and saying, yep, I'll take that. It's a textbook move of conviction.
And because of that, total shares are just marching relentlessly toward that big 15 billion mark. We're at 14.95 billion now. Every share represents a longer-term belief in the system.
Okay, so what's the result of all this burning and staking? This is where the rubber meets the road. Right now, a whopping 74% of all PLAZM is protected. It's off the market, staked, burned, locked up. That means only 26% is even available to be traded freely. That number was 73% just yesterday. The available supply is literally shrinking.
And here's the simple math behind it. 10,000 more tokens went into staking. 30,000 more got burned. So even with new emissions, the liquid supply, the stuff you can actually buy or sell, went down by 10,000 tokens. Think about that. The protocol actually got tighter on a day the price went down.
Okay, let's switch gears for a second. I want to give some quick context on one number you might see that's down, and then we'll look ahead at something that's incredibly important, the upcoming supply schedule.
So you probably saw the vault's dollar value dipped. It's really important to know why that is. The vault holds ETH, right? So when the price of ETH goes down, the dollar value of what's in the vault goes down too. Simple as that. It has nothing to do with PLAZM's performance. It's just a reflection of the wider market. All right, now for the fun part. Let's look at what's coming. Today's supply release was pretty light. Tomorrow is too. Then we have a couple of average days, but then just look at this. Day 134 is tiny, and then day 135, wow, we're talking just over 17,000 PLAZM being released. That is one of the absolute lowest supply days in the protocol's history, and it's just a week away.
So let's wrap this up. What's the final verdict for day 128? It's really simple. The price pulled back, sure, but the protocol, the actual structure, it just got stronger.
I mean, just look at the scorecard. It tells the entire story. One number in red, price. And everything else? A wall of green. Burns up.
Yield milestone smashed, staking up, liquid supply down, protected supply at a new high. You can't argue with these numbers. The fundamental direction was just overwhelmingly positive today.
It really boils down to this. 3% down on price, but 30,000 more burned, 10,000 more staked, 10,000 less on the open market, and $70,000 in real yields crossed. The price took a step back, but the fundamentals, they absolutely did not.
You know, a day like today is the perfect reminder to watch the structure, not the ticker. The ticker is going to do its thing, it's going to bounce around, but the structure, that's what's being built brick by brick. So the question we're all left with is, with the fundamentals getting this strong, what's going to happen when that historically low supply release hits on day 135?
And of course, we'll wrap it up with the full disclosure. Everything you heard here is just for educational purposes. It is absolutely not financial advice. Never ever invest more than you're willing to lose. And please always do your own deep dive before making any moves. Thanks for tuning in.